What happens to my credit score when one or more lenders check my credit? It's quite possibly the most frequently asked question I get from clients. There seems to be a lot of misinformation about the impact of a credit check, and I find that clients have obtained the information regarding this topic from sources that have blown the impact out of proportion. If you check your credit score with a mortgage lender, yes, your score might drop, but only by a whopping 2, maybe 4 points, which you will recover as time passes anyway. I find many clients are hesitant to apply for a mortgage just because of this alone, which makes no sense since you can't qualify for a mortgage without a hard inquiry. The other reason clients don't want to run a credit check is because another lender may have already checked their score and they are concerned with the effects of multiple credit checks. This is a more understandable concern because it is true that multiple credit checks can pull down a score, but that is also very vague and does not specify if that is regarding a credit check for a credit card, a car loan, or a mortgage, for example. So let me read to you something which you can look up online from the Consumer Protection Financial Bureau's website. The CFPB, by the way, is the government watchdog that sets the rules that banks, mortgage lenders, and mortgage brokers have to follow. This article is titled, "You can shop around for a mortgage and it will not hurt your credit." Within a 45-day window, multiple credit checks from mortgage lenders are recorded on your credit report as a single inquiry. This is because other creditors realize that you are only going to buy one home. You can shop around and get multiple pre-approvals and official loan estimates. The impact on your credit is the same no matter how many lenders you consult, as long as the last credit check is within 45 days of the first credit check. Even if a lender needs to check your credit after the 45-day window is over, shopping around is usually still worth it. The impact of an additional inquiry is small, while shopping around for the best deal can save you a lot of money in the long run. Note, the 45-day rule applies only to credit checks from mortgage lenders or brokers. Credit cards and other inquiries are processed separately. So what's the bottom line here? Your credit report is intended for your use, and it's not intended to be stored like a trophy that you keep hidden because it loses value every time someone looks at it. Be an educated consumer, know your options, and never let a credit check deter you from taking a critical step toward wealth creation through home ownership. I trust you found this helpful and feel free to reach out with any questions.